Middle East tensions send oil soaring and tech tumbling today. Welcome. This is Daily Market in 3 minutes. Let's dive in Wall Street. The S&P 500 closed down roughly 25 points at 6,344. The Nasdaq dropped 154 points to 20,795. The Dow managed a slight gain, adding 50 points to near 45,217. The Magnificent Seven had a mixed day. Meta and Amazon saw solid gains, and Microsoft edged up. However, Nvidia lost nearly 2%, Tesla fell roughly 2%, while Apple and Alphabet slipped. The energy and consumer staples sectors were the big winners, completely bucking the broader downward trend. Conversely, communication services, consumer discretionary, and financials took the heaviest losses. Bitcoin hovered around $66,500. Gold added a fraction to reach $4,533, and silver gained slightly to $70. WTI crude oil skyrocketed over 5% to reach roughly $105 a barrel today. Escalating tensions in the Middle East defined the day. Iran reiterated that the Strait of Hormuz remains closed, brushing off a diplomatic window proposed by President Trump. This massive geopolitical risk spiked oil prices, directly fueling the surge in energy stocks and dragging down the broader market on renewed inflation fears. The semiconductor sector took a massive hit today, dragging down the Nasdaq. Micron Technology plummeted nearly 10% after Google introduced a new artificial intelligence model requiring significantly less memory. This unexpected development shattered the narrative of an endless memory boom, causing investors to dump chip stocks. Food distributor Cisco shocked the market by announcing a $29 billion acquisition of Jetro Restaurant Depot. Investors punished the stock, sending it down 15%, as the deal requires Cisco to take on massive debt and suspend share buybacks. The 10-year Treasury yield fell to 4.35%, while the 10 to 2-year yield spread hit 31.32. The US dollar index climbed to 100.4, and the VIX remained elevated at 30.6. High volatility and a strong dollar show investors rushing to safe havens amid stagflation fears. The CNN Fear and Greed Index sits at 10.2, trapping the overall market deep in the extreme fear zone. This indicates intense pessimism and widespread panic among investors. Our market outlook remains highly cautious. Wall Street is currently a one-variable market hostage to oil prices. Until the Strait of Hormuz reopens, inflation fears will likely keep pressure on growth stocks. Looking ahead, we are watching the JOLTS job openings report on March 31st. We are also awaiting the pivotal non-farm payrolls report on April 3rd to see how the labor market is handling the economic strain. Finally, Nike reports its earnings on March 31st. As always, this video is for informational purposes only and is not financial advice. Please like and subscribe for more. See you next time.